Hey everybody, welcome to TakeStock Live. I'm your host, Sam Evans. This day, October 15th. Can you believe it already? Great to have you here. It's just gone 12 noon Eastern here on Facebook Live. Man, a week goes so quickly when you're having fun, doesn't it, right? I'm excited about today. Got a really great guest on the show joining me in just a few minutes. Good buddy of mine, go way back with this guy. His name's Ryan Watkins, master instructor, taught literally tens of thousands of people. We're going to be talking about the markets. We're going to be talking about your call, my put, all that good stuff as well. And obviously we are streaming live, so I can see people watching right now, and I will be keeping an eye on the questions as it's going already. We got questions about Ryan's jokes, so the insiders will explain what that's all about as well, but he'll be with us in just a second. Hopefully you've had a great week so far. Not a whole lot of things as well. Should I say there's quite a lot of things to talk about right now. What's the top news stories that are going around the world at the moment? Let's just take a little listen at the moment. I mean, listen, I try not to look at the news too much. I try not to get too caught up on it all. But the big news, I think right now, as well is we've had a couple of down days in the market, major gap downs in the S&P, NASDAQ and Dow, with a fantastic rally as I'm looking in the market today right on the open. The question is, what was causing that? A lot of it we've seen a couple of days losses. Labour Department on Thursday morning reported a higher than expected 898 new filings for unemployment from last week. But I think one of the big drivers has been coronavirus. It seems to be back at the top of the news headlines. My buddy's back in London right now, as you know, where I'm from, living in Philadelphia right now. But back in London, we've just gone to a new level of lockdown in many parts of Europe. And London's mayor is saying we are at a critical moment in our fight. Literally new rules starting at midnight on Friday, which has taken the medium alert to the high alert level. And we're seeing this across Europe as well. A lot of fear gripping as well. While in parts of America, we're opening up still as well. I mean, it's a crazy time. Anytime we seem to be hearing anything about coronavirus, what happens is we just get these sell-offs in the markets. And I think obviously there's a lot of other factors into that about what the long-term effect on the economy is. And I'd love to talk to Ryan a little bit about that. What else? France and Netherlands reportedly joined a call to crack down on big tech as well. A lot of kind of new legislation, particularly from France and Netherlands, about actually cracking down on giant tech companies. This is according to the Financial Times, particularly the targets here, Facebook and Apple. Apparently, they have very different cultures and come from different positions and have a common interest from a sovereignty point of view, from a competition point of view to regulate tech players. I mean, it sounds like they just don't like people making too much money and they want to kind of get things back a little bit out to the small guy with a small business. But we've seen tech have such an incredible rally in these new times, while everybody's now working at home, and the need and the desire for tech has been so strong, which has been reflected in the market as well. Also, we have Morgan Stanley, Walgreens, United reporting their earnings as well. And of course, on top of that, Trump versus Biden. It's still the top topic on here. Lots going on in the polls. Lots going on. Will he, won't he? Who's going to win? I mean, listen, at the end of the day, I don't want to get too political in all this stuff. I try to keep out of it. You know, I always say this, if you have to rely on who's in power, then, you know, you're probably doing something wrong. You know, I've learned at the dinner table here, never to get too kind of crazy about, you know, looking at the markets and looking at the politics and having those discussions with people. And this is one thing we do try to avoid on the show, is getting too political about things. Whoever is in power is in power. But, you know, on that subject, you know, one of the great things about it is the market is always open. No one's bigger than the market. And whatever's going to happen with these levels of economic uncertainty around here, what I'm going to say is this, you know, the great thing about having a skill to interpret the market is it kind of keeps you shielded from that. I would just say to anybody looking at the show right now, and I'd love to get Ryan's comments on this when he joins us in just a second, is, you know, one of the things I think we have to be really, really clear on is open to movements on both sides. Last week, Daniel Bustamante, my co-founder here at Stockability, who was on the show, saying, you know, he's having a very neutral position in the market right now and really having to protect as well. And I'd love to get Ryan's opinion on that. An opinion is a very dangerous thing to happen right now in these current market conditions. And I think the need for greater asset classes diversity is really key. But rather than me dive into the charts all on my own, I don't want to waste any time on here. And what I'm going to basically do is I'm going to bring up my guest who's going to be joining me for the most of this show on here. Just check he can hear me live. Ladies and gentlemen, I'm going to bring on Mr. Ryan Watkins here. Great buddy of mine. We go back. Ryan, let's just test the video right now and see if you're actually there and everything's coming. There he is.
How you doing, Sam?
And great, and wearing my favorite color too as well. So good to have you on the show, my friend.
Great to be here, Sam. Great to see you again.
you became like the mountain man. I mean, you are a mountain of a man. Any of you guys who don't know, Ryan goes probably about 6'6", okay, and now he's looking like a beast because he's leaning up in the coronavirus times. Tell me a little bit about what you've been doing. Let's forget about the markets for just a second, okay? What have you been doing? How have you been dealing with this whole coronavirus kind of thing and being locked down at home, Ryan?
Well, I've been growing a beard. It's pretty much the year of the beard. So I said, hey, why not? And it was much bushier. I mean, it was out here. And it
Did you
was,
get the itch? Did you
I
get the
don't,
beard
oh,
itch?
yeah, oh man, it was itchy. It was bad. I don't know if this was an American show, maybe in the 70s or 80s. I don't know if you guys had it in the UK or not, but it was a show called Grizzly Adams.
Oh yeah,
And it was
yeah.
basically the show about this burly man who just goes out in the wilderness and survives. And it's like it's a little story about him and stuff. And that's kind of what it was, like a Grizzly Adams beard. So it
I
went
like
full
how do the
beard.
white I don't know about you. My son's got used to me having a beard and hates it if I shave it off. What about your kids? Do they
My
like daddy
daughter
with the
was like,
beard?
"What is that, Daddy? Why you do what a little curious about it?" It's like, "What's a beard?" So they
I
got
think
used
it
to it
suits
too,
you,
and
but I
the
would
wife
say
likes it, and so I'm good with it now.
having been a bearded man for so long, I like it, mate. Great call on here as well. So, what have you also been doing to kind of keep yourself from going insane? Because I think one of the things I tell you this, everybody who I speak to on the show says, "Oh, I love the markets because I can do it from anywhere in the world." But the idea really is, oh, I'll do it from anywhere in the world and travel and have no restrictions. But yeah, you can do it from anywhere in the world now being your home. And
Right,
it's
yeah.
lockdown. I mean, I don't know
Anywhere
about
that's in lockdown, right.
I know and it is tough. I mean, I was talking to my wife about it, it is tough on here. And I think that, right now what's been helping me a lot is having a community of people to talk about the markets with, because,
Yeah,
being locked down alone, I think, forget being a trader or an investor is tough enough as it is, but you can really get in your own head at the best of times. And I think in the
sure.
markets, being locked down, not getting out, it's even worse. What have you been doing to kind of combat that, Ryan?
A few things. Number one, I have a lot more trading time now, which I've actually incorporated a lot of things that I've been wanting to do for a while. I've been doing some private mentoring for people, kind of like I would say, a next level mentoring. It's not so much basic educational stuff. It's more of, hey, they've already got the basic education. They know how to place orders and know where to buy and sell and that type of stuff, but they're looking for performance improvement. And that's really where I'm specializing in right now. So it's been a nice little thing that I can do aside from the trading, and it keeps me engaged in the markets. And what's interesting is, and I've realized this before from years past, is that when I help other people with education or performance in their trading, it helps me as well. So it's a win-win. It keeps me sharp, as well as helping the other people too. So that's been a real bonus for me. And I didn't really think about that at the time, but as I start helping other people with their own trading, it's really made a big difference for me too.
It's really interesting you say that. I mean, because you get a lot of people talk to you about that. Do you find that teaching affects your own trading and so on, and they make analogies of like coaching and so on, like a football coach, and which is something I know you've done as well, and only
I
obviously right
have,
now
yes.
and quite extensively as well. And and I guess you see a lot of people who are stars in in their doing, they go past their heyday and then they carry on teaching. I found it's not the same for people in the world of trading investing, because you don't ever have to retire from it. It's not like your knees are going to
Right.
get shot or anything like that. I think it's a unique thing where you can trade, you can invest, and you can help other people come up to that skill and coach them, but still participate at the same level as they are, and
Right.
it almost enhances your performance. What would be your take on that?
It's really interesting because when I was coaching football, it was a completely different outlook on the sport and the positions that I coached. And I almost thought, it's like, gosh, I should have coached first before I played. I would have understood so much more. It didn't quite work out that way though, and in trading, it definitely doesn't work out that way, but it's just a completely different perspective. When you're trading and you're just doing it by yourself, there's one perspective. But when you've gone through the gauntlet of trading and you've made it through that gauntlet, and then you can start helping other people with it, it opens up a completely different mindset, and you see things differently, not just from a trading perspective, but from how people learn. And everyone learns differently. Some people are very visual, like myself. Some people learn more by auditory. They hear, and that's how they learn best. Some people are more what's called kinesthetic, or hands-on learning. So everyone's kind of got a little bit different of a mix there, and so there's a little overlap also. So part of that is understanding how people learn and being able to directly get to the point with them. And so, the coaching or teaching or performance mentoring and stuff like that has not only been very fruitful for that person that's being helped, but for myself as well, and understanding how people communicate. And Sam, it's funny because it actually helps me communicate with my own kids, believe it or not. It's like, okay,
Absolutely.
my daughter is this way, I need to talk to her like this. My son is this way, I can talk to him like that.
Right. Absolutely. I mean, and it does, it really does. I mean, communication is such, I've learned that from years of teaching as well. I mean, I'd
Yeah.
say to you, it's been very weird. Like I've been in front of people, I've presented at rooms of 2,000 people and rooms of 2 people, so,
Yeah.
but when you have that human presence there, it's great. It's a different world, isn't it? When you're doing it online, I've definitely found that as we've been doing what we've been doing in Stockability, but I think we can still be just as effective. Thank God with communication. And I like to make sure the cameras are on and people can see me, and that's the important thing. But the tools have made it really, really great for that as well. Let me ask you this though. I mean, as you're now coaching, it would be fair to say people who maybe got some experience in the market. I think sometimes it's easier with somebody who's brand new. They don't have a clue, they don't know what a chart is, they don't know anything. But when you've got somebody who's maybe been active in the market for a period of time, I always found sometimes they were, not always, but sometimes harder to get through to. They picked up a few bad habits and things, but then they all seem to have the same kind of mistakes. I'd love to, or the same issues, would I say, the same hurdles they're trying to overcome. I guess my question to you would be, with the people who you're working and mentoring with right now, what are the common one or two things, maybe, or, what are the common things you're finding they need the most help with right now, Ryan?
It's a great question. And what I have found that the people that have come to me, it's almost like this common theme. They all have education. They know what they're doing. They know what to do. They're not doing it. You know what I mean?
Right.
They know what to do. They're just having a hard time doing it with consistency. So I would say accountability. A lot of people just need an accountability partner, someone to either motivate them or kind of kick them in the rear end when they need a kick there. Someone to point out the problems that they're having because they may not notice it.
Mm.
There's situations where traders are so deep into their problems they don't understand what they're doing wrong, and they need someone with a outside point of view to say, look, here's the problem right here, here's what you're doing wrong, and here's how you fix it. And so a lot of this is just simply they know what to do and what they should do. They're just having a hard time doing it. And they need someone to help them get over that really mental or psychological hurdle.
I'll say, Ryan, I always lay it out as I do. And, in our coaching room that we have, we share, when we're not doing the live looking at charts together, we have a very active live coaching community where we'll share outlooks. And just this morning, I saw a major gap down on the market and I saw where we were. And I'm like, well, a bit of momentum's on the play here. I feel like the momentum's going to go on this side. And, I had that little bit where I questioned and I got it completely wrong. I said to guys, I own it. The market's gone, long all day. And I had a perfectly good buy signal on here, but I made a judgment call based on something else. And it's so funny, after 17 years, things like that still happen. Now, they don't
Yeah.
happen all the time. Don't get me wrong. It doesn't happen all the time. But the day was like, well, no, I think that it could actually do this. And there's the problem, man, you thought. And it's incredible. Like what you
Right.
just said, you know what you should do. I got stats to see it, to prove it, what I do. But today I had an opinion. And I think an opinion is a very, very dangerous thing to have. And I think the more experience you get, the more of an opinion you develop. So you kind of, it goes backwards, right? Wouldn't you say? Have you been through something like
Right.
that yourself?
Absolutely. And it's been interesting. And even this year is a perfect case example, a case study of when I call it the COVID crash, when the market was crashing down from all the COVID news and everything. It's like, okay, great, here we go. Let's get short, let's do this and take advantage of that. And then the market reversed and it just shot straight up. I didn't think it would go up that far that fast. I thought it'd be more of a slower, more of like a typical reversal pattern that you see that takes time to develop and stuff. And just because in my mind that's usually what has happened, and so I had a bias with that. And so part of this is being open-minded enough to know that I could be wrong and I need to be aware of other situations that could happen. And I'm constantly reminding myself of that. For the point that you just brought up, we get opinions. I mean, that's just humans. We have opinions. The deal is the market doesn't care about our opinions. And we have to recognize that. We have to realize that and stay open to what is happening on the chart, not what we think is going to happen on the chart.
Absolutely. I mean, and I couldn't agree with that more. I mean, I'm going to actually just bring that up right now, and I'm going to actually just share that. with the audience what you're talking about, Ryan, right now, because I actually remember being on this, and hopefully you can see this, and everybody at home can see this as well. This is a chart of the S&P 500 right now, and exactly what Ryan is talking about. You know, as we call the big COVID sell-off that we had down here. Can you believe that was at the start of this year? Now it's interesting. What I'm going to do is I'm going to move the chart over to the right-hand side and just show that. Just show those big, meaty red candles, you know, and the sell-off that we had. I mean, this was a red candle going all the way down, you know, you can see to 220 on the SPY right now. And, you know, it is, you're almost thinking, all right, you know, we got to look at it. The trend is up. You trust the process. You know, we go back to the left-hand side a little bit. We take a look here. It's a big round number, a lot of kind of buyers in this thing. And as you rightly said, what a great move we had. The speed at which that happened, though, it was absolutely crazy. And I think that, you know, sometimes it can be hard that, you know, when you really look at this chart, is it that surprising? Because you know what, you think about it and you look at this market and you start saying to yourself, well, over the long term, what have we really been seeing? Higher highs, higher lows, higher highs, higher lows, and more ground being covered on the upside than on the downside. And like it's very typical on here, we had a sharp sell-off. But yeah, it bounced back. And, you know, I know you're very familiar with the concept of, you know, the correctional moves that we get. Let's put that on here. Sure, yeah. Into the impulse moves. And I look at it objectively and I'm like, well, actually, yeah, the bounce back that we saw there, and it happened quick. Well, it's still in an uptrend, right? So naturally should have happened at that kind of speed, I guess. But at the time, it's hard, isn't it? Because you think to yourself, well, there's this going on, there's that going on. You know, there's companies going out of business, yada, yada, yada. And I think, you know, sometimes it could be just a really good idea to literally turn everything off, not even bother looking at the charts, not looking at the news, excuse me, and just literally focusing on other things. I mean, I'm at that point now where I don't even really want to check the news. And I swear, I think some of the best trading decisions I personally have ever made are where I've not been looking at anything else and I've just been looking at the charts. But it can be hard to shut off, wouldn't you agree?
I do agree. And actually, it was interesting because during that time of that sell-off, I was just looking at the news all the time. I'm like, what's going on now? What's going to happen now? And getting all emotional about it too. Like, wow, this is pandemic and all this stuff. It's the first pandemic I've been through in my years of trading the market. And so it was a new thing. And which was interesting because those thoughts would come in my head, create a bias, and I would react to the market based on my bias. And, you know, some things worked out nicely. I actually do this in my long-term planning. I have what I call a black swan event. Basically an area on the chart where if there's some kind of black swan event, that's where I think it'll stop and turn and reverse direction. And on the S&P, it was right around that 220 or 2200 on the S&P, the futures market. So I got that part right. And I was happy about that for the long-term portfolio and all that type of stuff. But as it was happening live in the moment, all these emotions are going through and it's right. Like, oh, it's going to keep going lower. I'm like, no, just stick to your plan. Like you did this ahead of time when it was calm. Just trust the areas where you know you wanted to buy anyway.
Trust the process, right?
Yeah, exactly. Trust the process. Exactly right. So it was this battle between trust the process and yeah, but look what's happening. Trust the process, but yeah, but foreclosures. Look what's happening. Businesses are going out of business. You know, and so it's this constant battle going back and forth, back and forth. I'm like,
that's like raising a toddler. Yeah, but.
Well, no, I'm past that. My daughter's in the why stage. But why? Why, Daddy? Why? It's you know how that goes.
Oh, absolutely.
So we're in that stage right now.
It really is. It really is. It is a wrestling match in many respects. But I love what you just said there about, you know, the Black Swan event. You know, too many people I meet, and you know, and again, just while we're on this, guys, we are live right now streaming here on Facebook Live. This is TakeStock Live with Sam Evans and my special guest today, master trader and instructor Ryan Watkins. Please feel free to type your comments into the Facebook page right now. If you've got questions for Ryan and myself, we'd love to answer them. We can see live. We've got to say Robert Pelgrin saying, "There's the grizzly bear himself." Also, I've got Phil Jackson saying, "Are you going to tell some of your jokes as well?" We'll get there. I'm sure he'll drop the funny and definitely bring the funny as it goes on. But, you know, yes, getting back to our subject, having a plan. I think too many people just don't plan. And look, I had friends who were saying to me back in April, you know, what do I do? Do I sell? And I'm like, look, I'm not a financial advisor. I'm not registered to give you that. Would I be selling now if you hadn't already sold? You don't want to be selling right now at the lows. I mean, now this was the big thing I was saying to them. You know, I was looking at the charts and I'm like, look, you know, we got to take a look at these charts. We got to be real objective about it. And again, you know, going back over to our charts and just taking a look at this for a second, when we see on here, I mean, zooming in and taking a look at it, selling down here was not the thing to do, and that's I think what we were talking about, Ryan, having the levels there.
Right.
If you weren't protecting profits here, or any of these other areas, then fine, I completely get it. But then, it's just like, well, if you didn't, then I guess you got to hope it can ride back. That's perfectly fine. I think what the issue that I see with a lot of people have, though, is they don't have a contingency plan. It's one thing having, those levels like where you say, I like it. I'm going to take that phrase now, the coin that phrase, the black swan areas where, this could happen. But I guess it's what then do you do? Can this be a good opportunity to reload the boat and then pile back up again? Because if you did sit through this, sure, you make back what you lost. But is this a new opportunity to add? Are there other tactics that, you look at, Ryan? Like, would you maybe a good time to maybe say, hey, listen, I'll make up for some of the deficit by buying some, some calls or something, some leaps on the S&P, what other things, or do you go look at another asset class as well? Because I've always found, buddy, that, it's one thing, or what I say is definitely, I think, not so hard to actually necessarily spot the turning points. It's knowing what to then do at the turning points,
Right.
and then how you're going to manage your expectations in your trades from those turning points. What are some of the things you would look at in an event like that?
It's interesting. Trading more than one asset class has been incredibly beneficial for many, many years. All I did was trade equities, and that was it. And I started that in 1993. And then I started trading futures and then options and kind of, blossom from there, but mainly just stocks, futures, and options. So having the ability to trade different asset classes or different trading vehicles has been a big help. So for example, during that time, the market was getting crushed, just collapsing left and right, and the economy too, for that matter, for a while. I said, hey, what's a good thing to trade right now? Well, option premiums are going through the roof.
Right.
Why don't we switch over to primarily trading options? So I switched over an account, funded. I have a TD Ameritrade account, just move some money around. Says, okay, now I'm trading options. Boom, and just selling a ton of credit spreads, selling not so many calls, not too many of those, but a lot of selling puts, either cash secured puts, bull put spreads, and things like that. So just receiving credit because it was such a great market for that, and still is a little bit. It's toned down, lately, but during that time, it's like, this is beautiful. Why not get some really good income from that and grow the wealth that way? Because that is what the opportunity is at that point in time. Now, 6 months from now, it might be futures is the place to focus on, or forex is the place to focus on. And so really it's trading all of those. Well, for me, it's equities, options, and futures, just those three. But which one of those is the best opportunity at any given, let's say, week or month or period of time? And right now, or lately, it's been options, a lot of that. And not that there aren't occasions where you can still trade stocks and futures, there certainly is. But another issue that came up during that Black Swan event was portfolio management. And I don't know how many of your listeners are more of like long-term investors. Let's say like retirement accounts and stuff like that. But that's one thing that I do. I manage money for family members, not for public or anything. And more long-term buy and hold retirement accounts, things like that. So there's different allocations in there. And so while this was happening, I'm like, oh man, you know what? They got some long positions on like S&P and QQQ, Nasdaq, and so like that. And the process for that is to stay in those long positions. However, I have full control over that to rebalance anytime I need to, or make adjustments anytime I need
Nice.
to. So during that time, when it gets down to that 220, and actually I started a little bit before, rebalancing at those points. So you may have heard this, your listeners have heard this, you got to rebalance your portfolio once a year. Listen, you don't do that on January 1st. You do it when it's most advantageous to your
Right.
portfolio to enhance the growth of your portfolio. You don't rebalance on a date. You rebalance when you have a big spread between whatever it is you're rebalancing. So for an example, you got S&P and let's say the bonds, okay? So when this is happening, S&P is going down, bonds are going up. Now there's this big spread, this big difference between the two, and that's when you want to rebalance that portfolio, not when they're really close together like that. And so there was a lot of that stuff going on during those during that crash, and even a little bit after it too. So it really enhanced the returns of their portfolio significantly compared to not just leaving the thing alone.
Absolutely, absolutely, and I think that I've just brought up some charts right now while you were talking and so on, and I think that when we look at this, and hopefully viewers can see, I don't want to take you off screen, but I've got a very, if you take a look, all the flashing lights like a Christmas tree on the right hand side of the screen for anybody who's looking, but this is like a watch list of all the different markets that we look at as well, from index futures, interest rates, commodities, forex, individual stocks as well, bonds, the lot of them all on there, guys. What we see, it's exactly what you're talking about. It gets me so mad sometimes when I just hear people, they just literally buy, hold, hope. And I've always said this to everybody: there is merit, that for absolutely there is complete merit in buy and holding. I'm not saying that there isn't. I mean, again, you want proof of it. You want proof that there's money to be made in the world of buy and hold. Well, let's go take back a look at let's look at the QQQs on here. Let's look at the NASDAQ ETF over the last couple of years. There's money to be made. But the problem is, as well, is what are you going to do when it all goes a little bit differently? How are you going to rebalance? How are you going to reallocate? And that's what it really is. I think at the end of the day, it's a two-step process, and it's about understanding that nothing goes up in a straight line. Markets move up, markets move down. There's going to be a good time for forex. There's going to be a bad time for forex, right? It's about a rhythm and rebalancing it. And I think that, I don't know. Do you think it's that people just don't want to take that responsibility, Ryan, or they're just scared of taking that responsibility, or do you inherently just think that maybe people are just a little bit lazy and they don't want to do it? I mean,
All the above, Sam.
yeah,
All the above. Some of it is laziness. I think for most people, at least in my experience, it's just they don't know what to do. They don't know how to manage a portfolio. They don't know what to buy and what to sell and when to do it and all these things. They just simply don't know. And they would rather give it to an advisor or let a broker make a decision or someone like that, because they quote unquote know how to do it.
yes.
Trust me, I've dealt with many advisors and they don't know that side of the business. Most.
It's not
They
their
know.
job to, is it? I mean,
No,
let's
it's
face
it's
it. They're
not.
not the bad guys. It's the
No.
situation. It's the game, not the players. It's the game,
Right,
right?
exactly. And it's not to knock them that they don't know it. It's just that they're not trained on it. That's all. That's not their area of expertise. And so I make it a point for me to be, hey, that's got to be my expertise. I need to know how to do this for myself and my own family. In fact, it was about 4 years ago, Sam, where my wife and I, we, had a talk and stuff, and we're doing some estate planning. And I realized, I'm like, oh man, you know what? She doesn't know how to trade. She doesn't know how to invest.
I remember you
I,
talking
I,
about this. Yeah.
I need to figure this out for her. And so I started working on this big, huge project on research. I studied the best of the best investors in the world, and what do they do? What works and what doesn't work? And they said, what would work for us in our situation, and make it specific for her. Like if I passed away and she was left with the kids and stuff, what would she do with the assets, and how would she manage them? And so I had to figure all that stuff out. Whereas most people, they just don't know how to do that. And I think that's probably the vast majority of people out there, that they don't know. And there's definitely a whole thing that could be taught on that. Really, quite frankly, it'd be a whole course in
Totally.
itself, really. But it's been
Absolutely.
very, very beneficial for us. And then started doing that, and then next thing I know, I got other family members calling me like, "Hey, can you do that for me too?" And during this COVID crash was the real test, because you can test things hypothetically, these back tests and stuff like that. And on these back tests, it worked beautiful.
Mm,
And it had very low drawdowns, excellent performance, what's called alpha, which is just outperforming, the S&P by a significant amount, with significantly less drawdowns too, which is what everyone's looking for. Outperform the S&P with lower drawdowns. Okay, got that, check. But then COVID came, and I said, now's the real test. Is this going
yes.
to work in a real live, real money environment, not just some hypothetical back test? And Sam, it was absolutely incredible. It just performed better than I expected. And, the family was really happy, like, wow, this is amazing. We went through this crash and the thing was practically untouched.
Wow.
It's just like a little breeze hit it, and then it just came right back up and back to all-time highs in the account. So it was incredible. So things like that are definitely worth the time to do these kind of asset allocations or long-term planning and wealth management type of issues and things like that. It's so if any of your listeners are out there, they're thinking like, wow, man, it's a lot of work and I got to learn it all. Yeah, that's true. It is a lot of work and there's a lot to learn, but it's worth it.
It
It's
is.
absolutely worth it.
And it's like I think one of those things, you put the work in, you got to be prepared to the work in, you get your fitness up, and then it's maintenance, right? I think it's harder to
Right.
get in shape than to maintain the shape,
Yeah.
rather than anything else. And it's about, changing the way you diet, changing the way you eat, changing the time you get up in the morning, all those kind of things as well. I just get really sad when I just see, people, investing and just like giving big chunks of profit back and just not doing anything, but
Right.
again, it's the industry, isn't it? This whole
Yeah.
world, I think, has been designed to convince people that, you can't do it on your own. And also the other side of it, well, there's a couple of things. I mean, I look at it, and I'd love you, because you've been in the world of education. We've worked at the same places, over the years. I think that first there's the message of, you can't really do it. And let's face it, this is the management industry, mutual funds, all of that. It's built on huge levels of commission for people who don't need to know about the market. All they need to do is just be able to say, hey, you're going to be okay, because look what the market's done the last 40 years.
Right.
That's the first thing. And they're not bad people. They're just trying to put food on their own table and secure their own financial future. Then we have obviously the scenario of, people think, well, it's too complicated and there's not, the education out there. And then there's obviously how long does it take? Is it complicated? Can I do it? And is it expensive? And I've seen it all different ways. And I've seen that, astronomical costs of education and then taking so long to do it. I think it's about finding that happy medium. I think though, one of the things that struck me though, and it's definitely come across in this conversation that we've been having, is there are certain people think that, you know what, all you need is just one strategy, buy low, sell high, and that's it. And as I've learned over the years, having been a curriculum writer and yourself, you need more of a Swiss Army knife. It doesn't have to have 10 different blades on it, right? But you have to have more. It's not just simple of, hey, this is a strategy to use on stocks, futures, forex. Price action analysis, absolutely. I mean, with price action, price is price, right? The way it moves, when it goes
Yeah.
up, down, sideways. But the vehicles that you use, options, and then some of the strategies, like I look at strategies specifically for options. I have a different style of how I use futures as well. I think you have to have a few different techniques in your tool bag. Not too much, but it's not just as simple as, hey, here's a core strategy and that's it, and it works for everything, right? I mean, have you found yourself, in a similar environment? I mean, you may be different to me. This is just what I've found over the years, Ryan.
I would say this. If someone is just starting to learn something, I think it's more important for them to get really good at that one thing and just focus on that so that they get good at that one thing and they see some results from it. And then once they have a strong foothold on that, then they can branch out to do, let's say, strategy number 2 and get good at that. And then strategy number 3 and get good at that. Because at least this has been my experience. When I was first learning this business, how to trade, I was trying to learn absolutely everything I possibly could. It's
Hmm.
just too much information. It was overwhelming beyond, and that's another, I can't even, it was too much information. And it took me a long, long time to, figure it out and get through all that information. I wish going back, if I was just told, hey, Ryan, just do this one thing and get really, really great at that, and with maybe a couple variations to make it, personal to me, it would have got me through that learning curve much faster. And then I can add on these other things. Right now I'm at a point where it's like, okay, I have my not core strategy, but my go-to strategies for specific situations. For example, for the quick hitting stuff, futures works really well for me on that. Or even some short-term swing trades. I like the futures market for that. For a little bit longer term to medium term swing trades, I think options are absolutely amazing, and you can do some great things with that. And for me, it's just a couple strategies that I do for options. They're simple, they're straightforward, and they work really well, and I like it. And then there's the really long term stuff, more like maybe retirement fund type of buy and hold. Not really buy. I don't do any buy and hold. It's tactical allocations with tactical rebalancing, things of that nature. So there's an active component to it, but it's not just buy and forget. So I would agree that you don't want to have too many things.
Right.
You definitely don't want to have just one thing, unless you somehow can apply that one thing to every situation in your life, which I haven't seen that with anyone, that you can take one thing and apply it to every situation in someone's life. Short-term income, long-term wealth, retirement, the whole deal. Usually that takes different strategies to be able to pull that off. So I would agree
Yeah.
with you, with the only caveat that says in the beginning, I would just have someone focus on one thing, get a strong foothold on that, and then branch out into something else.
Absolutely, and that's great with strategy. And price action is price action. I mean, like I
Right.
say, that bit I 100% agree. Like Bob Pelgrin's just saying on here, he's like, right now I'm just working on gaps. Okay, great. Some awesome gap strategies that have been
Yeah.
phenomenal. In the markets, like playing gaps in different ways over the last couple of weeks as well. So just get that nailed down. Get that nailed down. I always say people try to bite off a little bit too much at the start of it all, and I think that first a good understanding of price. I think one of the biggest learnings in all of this, and I'll say it now and I'll say it till I'm blue in the face, is that too many people, they just read too much news and they make too many decisions. Strategy number one is don't let the news make the decisions for you.
Right.
That's the thing. Strategy two is then start to learn and understand the price action, and then you can get a little bit. I mean, one of the things we talked a lot about over the years is like seasonal stuff. There's some
Oh yeah.
amazing stuff.
Yeah.
You're quite into that as well. I mean, and again, we're not a subject, and maybe this is I'm going to have you back on the show for sure to talk more about this. But
Sure.
we talked a lot about seasonality. Because
Yeah.
I've always struggled in the world of fundamentals to a degree. It's hard to time it. But seasonality is a fundamental, piece of this too. What kind of, how's seasonality worked out for you, and how much do you enjoy that? And what kind of markets do you find that the seasonal fundamentals are really powerful for you?
So, number one, for maybe your listeners that don't know, what is seasonality? Seasonality is basically something that happens on a very predictable and regular basis throughout the year, or a season. And one of the things that I look for is really four things. Number one, seasonal high.
Hmm.
Where's the high point of the year? Okay. And it's usually within a few weeks. So just imagine if you knew, historically speaking, anyway, if you knew historically speaking that the high of a market was between maybe 3 to 4 weeks of the year, that would give you incredible predictable shorting power there, or exiting if you're in a long position. And then there's number two is a seasonal low. Where does that market bottom out in within the year? And so those are the first two: seasonal high and seasonal low. Where are those points of interest that we need to be aware of? And then you have what I call the bullish season and the bearish season. Now the bullish season, pretty much always starts right after that seasonal low.
Hmm.
But how long does that season last? I'll give you an example. In fact, can you pull up a chart of gold?
I can. Or
That
heck,
would be that would be a really
if
good
you want,
example.
feel free. If you want to do it yourself, my
Okay,
friend.
sure. Let me just I'll pull up GLD here, because that would be a good example, because this seasonal bullish move is coming up here real soon. So let me do this real quick here. There we are.
I'd love to see this. This is great. I mean, there's so many different ways. My partner Dan says there's so many different ways to slice the bread. I love that. Let's take a look.
Are you seeing the gold chart right now?
Absolutely, a GLD on a weekly and daily chart. Let's take a look at that.
Excellent. So let's focus on the weekly here for now. Okay, so with gold, it has some really strong seasonal movement. So for example, I'll just focus on the bullish one for right now. And the bullish season, there's actually a couple here for gold, but the one I really want to focus on is the bullish season that has what I just call the biggest bang for the buck. In other words, if I'm going to buy gold, do I want price to go up slowly and methodically, little by little, or do I want it to go up like there's no tomorrow? I mean, just go to the moon on a rocket ship, That's what I want. So that's what I'm going to be looking for on gold. So I need to find, well, where is that seasonally speaking? So for a seasonal big movement for gold, let me grab it here real quick. Let's go zoom in here for you guys can see this better here. Historically speaking, that has started, I'll give you guys a landmark, okay, Christmas time. It's just a little bit before Christmas, actually. Just about a week or two before Christmas is when the really big push in gold begins. So here's just I got the 27th. So let me back it up here. So right about there, right about the 20th it's not the seasonal low, but it is kicking off or starting the aggressive bullish move. Now, this year you can see, okay, yeah, well, it worked. It went up and it kept going, up after that. But really what we're focused on is this little push from about here to here.
Mm-hmm.
So I just kind of landmark wise think Christmas to Valentine's Day. So it actually starts a little before Christmas. So let's just say, mid to early December, you want to be ready for this. So start looking in November for it, coming up real soon here. and expect it to go right around Valentine's Day. So let's say mid-February. Okay, early to mid-February is our target time frame on this. Now, I've traded this for many years now, and it's not just gold, by the way, Sam. This is silver,
Right.
and platinum has an even more aggressive push to the upside. I did that one last year, and it has just a huge run up. And we can go into more depth on this maybe on another show that we do. But just to give you guys a quick example for the listeners, the seasonality is really powerful. It is one of the very best predictors out there of what is going to happen or what is likely to happen in the near term future. And so gold, just kind of coming up here, because we're only about a month and a half or so away from this, is gold, silver, and platinum. So these are the ones that I'm personally looking for. And so right now, for example, we say, okay, here's gold current price on the right over here. So because we're getting close to its big bullish run up here in about a month or so from now, what is it that I'm looking for on this? Well, we got this little trend that you can see, this little
Right.
micro downtrend right there. So one of a few things will happen. Number one, either price will go higher. Oops, that's my caps. Okay, so price goes higher.
Right.
So what I'm basically doing here, Sam, is just saying, okay, if price goes higher, what am I going to do here? Well, I want to be prepared to buy a pullback after it starts really getting moving up. I don't want to buy just right yet. It's a little early still, and we're still, seeing some weakness on here. I want to see first some proof, some evidence that the bulls, the buyers, are coming in and have wiped out any of those sellers that are in control of this thing right now. So I'm not quite ready to buy this yet. But I'm aggressively looking at this one for that seasonal big push going into all the way into February. And so that will be one right there. And then, of course, if it does keep floating down lower and we start getting down into that, call it Thanksgiving-ish range, late November, early December. And let's just say, for example, it comes down into this area down here somewhere during that time, Thanksgiving, or right about there, then I would go ahead and just start buying or accumulating right here. Now, I say buying, that could be looking to the left and buying at support. It could be a credit spread. It could be a number of tactics that I would deploy to get in a bullish position. So it doesn't necessarily mean buy GLD. It just means I'm bullish on gold. Now, what tactic do I want to use to best fit the situation? Now, in years past, I've bought calls on it, mainly because of the explosive increase in price, which benefits calls, buying calls, whereas credit spreads, it would still work, but on calls, you get more bang for the buck. And most of my options is just simply credit spreads. I like getting that premium up front. And it's simple, it's easy, and there you go. But in situations like this, when you have an explosive run up, then I prefer to just buy the call or some version of that and, get that big move to the upside.
I love it. It's almost like we talk a lot about it, in our trading room about what you're doing is you're creating an idea. You have an outlook. You have a thesis, if you like, that you're putting together, and it's like now I got to work out the deal. Right. So what we're seeing now is, okay, I've got my outlook. I believe that the goal's going to take in your time. And I love that because you can get very caught up in the wild, fast clicking buttons frenzies, which doesn't really do anybody any good.
Right.
So now we've got a plan, we've got a structure. And then it's like, okay, well, now I've got the thesis and the outlook. What's going to be the best deal at the time?
Exactly.
When it comes out, because I think that's then the thing, isn't it? It's like, okay, now we're here. What I want to now understand and what I want to do is I want to just have a good idea of, when the market does get to say that 1600, that 160, 165 point, those options might be cheap. I could buy options on that. Or, I do just take the gold futures. Maybe I just do a stock position, or maybe there's another related market. But I really like that concept. Would that be a fair way of looking at it?
Yeah,
like
absolutely.
Thesis and then constructing a deal.
Right. And because the other thing you got to think about is, okay, well, gold's done really well historically, that's the key word, historically,
because you're talking
but
about
it doesn't
this
mean it's going to do
obviously.
it. Right.
Like, and it could break out to this area here to the upside, right?
Sure. It could do either one. And I need to be prepared for either scenario.
Yeah, and then or it could come down to this lower point. I guess the question is whether it's
Yep.
here or whether it's here. What is going to be the choice that we're going to make at that particular point. I think that's I like that, and I think and again that's what I was talking about before, Ryan. I think which you've really kind of perfectly demonstrated at that point. The idea here is that this is less about just blindly saying, hey, this is my strategy to buy or this is my strategy to sell. It's like, all right, when the market's here, what action am I going to take? And that's where you can have an outlook and a strategy that meets the requirements of the outlook.
Exactly. And the other issue too is, okay, is this going to be a short-term trade or a longer-term trade? And which account do I put it in? Well, this seasonality is not a day trade thing for me, so I know that's not going to be in the day trade account. This is more of a longer-term, 1 to 2 month type of play here. So that puts in the category of a swing trade, or a longer-term swing trade for that
We've
matter.
got the weekly chart up here. I'm just highlighting for everybody.
Yeah,
exactly.
exactly.
Right now, we're not day trading off of 5-minute time frames here.
Yeah.
These are kind of the tactics that anybody can do, and
right.
Look, I think there are merits in the buy and hold. You want to enjoy these bigger trends as they go up. But again, it's how to handle them, how to enjoy them, with the right tactics. I think that is absolutely key.
You mentioned you had a student that is doing gaps.
Yes, yeah. He's watching right now, Robert Pellegrin. Absolutely.
Oh,
yeah.
Hey, Robert. Okay, great. So, we're on a weekly chart here, but, if Robert's learning how to trade gaps or something really interesting, just one of my favorite day trading techniques is the opening range. Opening range breakouts, breakouts, and then shorting or buying the pullbacks and that type of stuff. So that opening range is a really nice day trading tactic that fits really nicely with those gaps too. Now, what's interesting is we've talked about seasonality from more of a longer term perspective, 1 to 2 months or 3 months type of thing. But you also have, I won't call it seasonality for a day trade, but I'll say somewhat predictable rhythms as a day trade. And when you're looking at gaps, one of the rhythms that you may find as a day trader is, let's just say price gaps up, for example, and it trades kind of in a short, narrow band for 5 minutes, and then it breaks out to the upside. Okay, what do we do with that? Well, there's a tactic called an opening range breakout where some traders will just buy the breakout above that 5-minute opening range. That's one way to go. Then the other way is just to buy the pullback after it's broken out. Yeah, there you go. So there's that. I love that. Perfect. There it is right there. So there's the pullback. And that is one of my favorite day trading tactics right there, right? Exactly as you have it. So, a gap up, opening range, breaks out, and then buy that pullback. And you see this fairly often. It's not an everyday thing. No, definitely not. But it's just like you said, the Swiss Army knife or another tool in the tool bag. It gives you another tactic that you can use. Again, it's one of those things where you want to really study this, back test it, get good at it, and master it, and not just add it to add it. We want to add it to be purposeful with it and say, I'm a day trader and I want to specialize in whatever, you want to specialize in. But that would be another thing too, maybe for Robert or whoever else to add to, the day trading toolbox. And again, it's not quite a seasonality thing, but there's a little bit of rhythmic type of predictable movement with that.
I like the stock market for that very reason.
Exactly. Yeah,
I think it's really cool as well. Phil Jackson saying it happened today on the RTY this morning as it goes. You saw a very similar scenario on that where we had that, that opening range and then the push higher as well. If you go take a look at the RTY, why don't you pull it up on like a 15-minute chart and you'll be able to see it actually right now. It did after that gap down. And then, there's always this thing of, hey, I've got to take action right now. But look, and you'll see a chart when you pull this up and I'll be able to kind of mark some things off here for us as well while we see it, just while your charts are loading on here. But you actually saw it. You had a nice decent gap down on the market today, and then that push actually happened. So we can actually see around the 930 on here.
Let me do this. Let's go .d on this so we can see it. Yeah, here we go. Yeah, there you go. So for example, let's go. Here's your opening 15 minutes right there.
Yeah.
It breaks out, and then there's the little pullback right into it.
Absolutely.
So there's one example right there, and then here's what it looks like on the 5. Yep, that's it. There you go, right there. Picture perfect. This one's a gap down. It works either way, gap up, gap down, and that's it right there.
For
So
anybody
that,
who's not familiar with that as well, you know what Ryan's talking about with the dot D, you'll see it on the top left. These are charts that are literally just looking at the cash session hours between 9:30 and 4 p.m. on the market, because futures markets actually trade 24 hours a day. So this is just focusing on that, which is why you see these price gaps here as well, what Ryan was just showing you. But it's all about having tactics. But then I think that the most important thing is then getting the most out of it, you know, and then understanding, you know, where can it go from here after this pullback, where then can it actually continue going from that particular point, you know, and making the most out of it. I've been trying to adopt more of a style lately of an intraday swing trading, Ryan, where it's like, hey, let's find a good opportunity and then see if I can milk it for a little bit more as well. But again,
I
different
like that.
tactics.
In fact, that's one of my absolute favorite ways to swing trade is I do my
Intraday.
analysis on the, bigger pictures, weeklies, dailies, 240, 60, something like that. But when I take the trade, this would be a perfect example right here, is take the trade on a 5 or a 15-minute chart, get a
Yeah.
better entry. And when you get a better entry, you decrease the distance between your entry and stop, which allows you to get a bigger position size, which allows you to make more money. So yeah, that's excellent.
I'm actually
Love
looking
it.
at the RTY myself, and I'm just looking and seeing if we've got any real delay there. And it actually looks spot on, which is pretty good for TradeStation, because it can be a little bit hit or miss now and then. But such a great charting package. What I'm going to go ahead and do right now is I'm just going to actually just stop the sharing and just kind of a little chat with you face to face, and then we'll pull up some more charts on here as well. Ryan, super useful. I love that. I mean, definitely coming back on the show. Everyone's really enjoying what we're saying on here as well. A few of my family members, Anne Law. Hey, Anne, Andy Packer on here. I can see you looking, chatting as well. Great to see you on the show. It's been a while, Andy. I hope you're doing well as well, Anne. I would say this, I think, we got about, how long we got here? Probably about another 10 minutes before we need to wrap things up. Great thing about your own show is you can carry on going as long as you want to. We do a little feature called Your Call, My Put, where one of us takes a bullish stance on something and shares it. The other person takes a bearish stance and shares it. And I'll pull up the charts and we can look at those together.
Okay,
I'll do it from my screen so we can look at that together. But before we get into it, I mean, look, it's election time. Let's just talk about this. Obviously, that is affecting, and I don't care. I mean, I've got viewers like Andy and Anne. I know right now you're in the UK, Essex, London bound as well. I don't care where you are in the world. The US election is going to affect everybody to some degree. We live in a truly global economy now, and that is the way it is, and it's the way it's always going to be. So, have your tactics overall, your outlook right now, I ask everybody who comes on the show right now, how are you feeling about, the election? If Biden gets in, Trump stays in, what is it going to be? How are you preparing for that, Ryan? And then we'll do our Your Call, My Put, and I will be a gentleman and give you the choice of what you want to look at.
Okay.
Go for it. I'd love to hear your opinion on that, sir.
Sure. So basically it goes like this. I am bullish with a hedge.
A bullish hedge. Okay.
Bullish with a hedge. So bullish meaning I am still looking for buying opportunities. And however, with the election coming up, I am absolutely expecting volatility, especially with the possibility that it could be decided in the court system or some kind of delayed announcement of who the president is, whether it's Trump or Biden. So I'm expecting something like that to happen. And so anytime there's a situation of an unknown, highly likely to have a volatile event, I'm going to get hedged on that. And different ways to hedge, options or futures or whatever it may be. But for example, when I'm doing the equity, my options, credit spreads, things like that, I said, okay, there's a portion of this that I'm allocating to being bullish and going in for those long positions, just like I normally would. So no change on that. But because we have a volatile event coming up, getting closer and closer every day here, I want to make sure I'm hedged for that in case we get a situation where the markets, really go down fast because of that. And I don't want to lose money on those positions because of, an event of that nature. Now there's stops in place and all that stuff, so that would help with that. But, if there's a lot of long positions and they all get stopped out, ouch, that's going to be a hit to the account there. It's all going to be within, my risk amounts and all that stuff, but it doesn't mean I want to go through that. So during this time, I'm hedging. Now, it's no different than, say, we go to Forex Factory, we look at the economic reports and say, which ones are coming out that have high impact, like, the Fed speaking or something like that. It's no different than that. It just, in my opinion, it's bigger. it's like a triple red. Like if this was on Forex Factory, it'd be triple red. And so I want to make sure I'm prepared for that.
I think, and to anybody who's looking at the show right now and unsure about, what is a hedge? A hedge is basically, a situation where, you're in an exposure, you're potentially having profit in a position like this. And if that thing goes up, you're making more and more money, but you don't want to give it back. If it goes down from your entry point, you're losing money, right? By having a hedge, it's almost like balancing it. So, if this thing goes up, great, you're making money. But at that particular point, if it does go down, you'll have an equal position that will weight the losses as well. So it's kind of puts you in what we call like a neutral delta, but delta neutral, if you like, so you have no exposure to get hurt in that as well. A really good time. And that way you can stay in an existing position, albeit locking and protecting the gains, but it means you're not going to be losing much if it goes against you. And it gives you that bit of flexibility because, sometimes you'll see a market, this and all this erratic nature will happen and then it will calm back down and it will just carry on doing what it was doing originally, and I think with an election, you can certainly see this. Wouldn't surprise me to just see, trends continue as they have, but see a ton of volatility before they continue. Right, Ryan?
Yeah. Another way of looking at this is it's temporary insurance.
Yeah.
For example, I live in California. We got a lot of fires going on, and I live, in the hills, which is, it's like fire season here year round
Yeah.
almost. And yeah, we have fire insurance and all that stuff, but when it's hot, dry, windy, it's like, uh-oh, here we go.
Yeah.
It's like the risk is elevated. So what can we do to protect the house more? And that's kind of where we're at right now with this election is what can I do to the accounts and the accounts I manage to protect them a little bit extra than I normally protect them. And that's all it really is.
So very helpful to anybody here. And I think we could do a whole session, just on the concept of hedging alone. I think that would be great. But because time is short right now, let's take a look. Super useful stuff, by the way, but got to ask you on here, and I'll bring up my own charts right now as well. So I'll go into kind of the desktop view here and pin things for you. And then what I'll do is I'd love to ask you on here, Ryan, about, basically on this, what is your outlook? So you've got your choice, your call, my put. Your call would be, what are you bullish on right now? My put would be obviously what I'm bearish on. What do you want to take, the bullish or the bearish stance today, my friend?
I'll go with bullish.
All right, bullish. Well, you got a whole selection.
Bullish with the hedge.
All right, great. What do you want me to pull up on here then, my friend? What would you like to take a look
at? India, Romeo, Bravo, Tango, iRobot.
What's that?
iRobot, IRBT, India,
IB,
Romeo, IR.
IRBT, yes?
Yep.
All right, here we go. iRobot Corporation. Wonderful. Tell me what you're looking at, Ryan. I'll pull it up for what chart would you like to focus on?
Weekly chart and daily chart.
All right, here's our weekly chart then. Wow, look at this. All right, so just took out this previous area here. What's your outlook on this one, my friend?
Definitely bullish on this one. It did just make a new high. Fundamentals are really solid on this company. Also, if you look at what they do, they're a robotics corporation, and I really believe for the next really generation, that's what we're going to see is more and more of these robotic type of things being built. Now they focus primarily on household robotics, and so more and more people will be heading that direction as we kind of like the Jetsons. I think we'll be heading more closer to that. But specifically, right around the $75 to $80 range, I think would be a good buy spot for that buy point.
Oh, so you'd like it like now? Yeah, I mean, we just took it out. I always get uncomfortable about buying new highs, but the trend is still there, holding its levels real nice. You've got to look at here, but again, this $80 area as well, massive area, especially which took it onto these brand new highs that I'm seeing at this particular point as well, Ryan. I think that I like that. And I think with markets that, again, if you go and take a look at this on these charts as well, it's got some strength to go. I feel really comfortable if I look at it over here, especially if we can get just above this area here. I see, these highs here, there's nothing to really stop it at this particular point. More of a long-term play, short-term play. What kind of time frames would you be saying on a position
this
like
would be
that?
A swing trade for me on this one. So I'd be looking for just like anywhere from 1 to 4 weeks on this.
Nice. And what I like about it,
I definitely think it has room to go even more though. If someone wanted to put this in their longer term portfolio, then I think it'd probably be a decent one for that too.
Lovely. And what I like about it is you're not saying get into it right now. I know you were mentioning this 75, 70 area as well. So again,
Yeah.
it's that thing of, hey, here's the deal. What I'm looking for is to get it for the upside here, because
Right.
like right now we've got a lot of stuff to clear off over to the left-hand side as well here. So
Exactly.
I always say I feel like I'm doing football commentary when I'm on these charts. But I like
You're doing a good job.
very familiar ground for you, right? So it's all good. But I like that one. So IRBT. What about myself? So I mean, on the bearish side of things, I got to actually say right now on the stock side of things, I'm not feeling Netflix right now, Ryan. I'm bringing up Netflix, taking a look at, and I love my Netflix. I really do. As a company, I think they've done real well. But again, where we are right now, and I'm talking more about over the next maybe week or two here, what I'm drawing a major attention to is just on these two charts here, definitely on the monthly chart that we're looking at here. What's just my concern is this double rejection that we've had around this $575 area. You see this double rejection that we've had.
Yep.
Tons of selling pressure coming in, tons of obviously the bears coming in at this particular point. My concern is the ferocity of this move to the upside. Now, again, if I could have this at any price, I got to say I love it around 400 here. I mean, this is nice. Was a key prior resistance area here. We're transitioning to some kind of a support area. First time back for that would be great. Do I think it's going to get there? The problem is this: if the market carries on lifting, if we get a little bit more wind in the sails of the Nasdaq, I just can't see it getting there. I think it'll be more of a shallow pullback. But right now, with a lot of this selling rejection and pressure that we've got coming in here right now, I just look at it and I see a lot of wide open space. I really, really do. I'm going to say, going over to the weekly chart here, wouldn't really surprise me to see $500 tested in maybe the next week or so. And if we could get that 450, oh, hallelujah, I'll be checking out the options plays on that. I wouldn't want to be putting cash down on that, but definitely that would be a great options play depending on the volatility at that point. But I think 500 is going to be a big test. So short term to the downside, but then expecting another retracement back to the upside on here for another test at the moment. What are your thoughts on that one?
I actually would really agree with your analysis for the next week or two. I do think it'll see some bearishness, coming on down to that 500 or so level, 460, somewhere in that range. And if it does, I absolutely will be looking to do some bullish positions myself as well.
Nice. Well, it's always nice when your co-host agrees with you, I will say. So what's the plan for you now? It's on a Thursday on here right now. So what's the plan for Ryan Watkins for the rest of this week?
Well, gonna just keep on trading, and I'm gonna go run around with the kids here pretty soon and get them tired.
Lovely. I got a very similar thing. We're having like a little mini Halloween party here at the house with just literally our little boy who just turned 3 a couple of weeks ago as well. So it's all fun for him and doing that as well. And then cracking on with everything we do. Got vacation next week as well. So taking a little bit of time out as well. Excellent. Well, listen, Ryan, if anybody wants to reach out to you, what's the best way they can get you?
Trader Tactics is my website, so tradertactics.com, and that's where I'm at.
Wonderful. Excellent. And also, guys, you can reach out to the show as well. And obviously I can forward on anything to Ryan as well. Ryan, it's been an absolute pleasure. Thanks for having you on here as well. Hopefully you can come on the show and be a guest on here another time.
I'd love to. That'd be great.
We'd love to see you. Thanks a lot, Ryan. Do take care.
Thanks, Sam. Appreciate you.
So that was everybody. That was Ryan Watkins on the show joining us. It's great to have him here as well on the show. Go back a long way with Ryan. It's been a long time that we've worked together and stuff. And I've been trying to get him on the show. He's a busy man, as you can see, but rightly so, with all of the things that he's got going on in his world as well. That was a fun show. A lot of things. I think many more shows could just come over what we've been talking about there. Guys, I love the fact that you've been in here live, asking your questions, putting your support in. If at any time you need to get any questions on here, I'm going to leave all of the information at the end of this broadcast on here. Take Stock Live was brought to you by stockability.com. I will leave all the details on there, how you can subscribe to the Take Stock newsletter, the weekly newsletter, how you can find out and get all of your questions answered as well. And Ryan says, thanks, Sam. Thanks, everyone. Have a great day as well. A real hit on the show as well. Some great times to talk to somebody with some real understanding of how these markets work. Whether you're a first-time viewer or you've been right from the start, it's been a pleasure working with you. Spread the word. We are always here on a Thursday at 12 noon Eastern time here on Facebook Live, and this show will actually be put back on the YouTube channel as well. You can see it on the Take Stock YouTube channel, where our archives are going to be on there as well. Guys, I'm Sam Evans. This has been Take Stock Live. Thanks so much for being here. Have a great rest of your trading week, and we will see you next week for the same time as well. Thanks, everybody. Take care.